Thank you, Mansi, for the update. So, hi everyone, I'm Tushar Jijani. I'm an alumni of IIM Lucknow. Currently, I'm a mentor at my PrepZone. So, let's get started. 6 years back, I was also looking at this plain sheet where I was unable to comprehend anything about finance. This was me 6 years back, a plain sheet, not knowing about F of finance or ABC about finance. However, one of my mentor back then told me this, don't stress too much for future because tu kar lega yaar. And it means in English that you will able to do it. For everyone here, I know that everyone will do something in their own life, be it MBA or anything else. So you are halfway through the process, completed your CAT, and now you're just left with your PI preparation. So to everyone here who have joined this call or maybe watch this recording afterwards, this is just a reminder to everyone that tu kar lega yaar. You all will able to do it. So let's get started about the finance, the basic of finance, which is accountancy. Here we will be covering the basic questions revolving around FRA, and let's get started. So the basic introduction about financial reporting is how a company shows their financial performance to the stakeholders. So you may be expected to answer this question. How do you report your financials to your stakeholders? You can say that there are three ways or there are three financial statements that we can take care, or by supplying three financial statements, we can provide financial performance to our stakeholders. First is balance sheet, second is income statement, third is cash flow. So anytime and every time, whenever someone asks what are the financial statement, you can say it's a reporting mechanism which helps us to provide financial performance to our stakeholders. And these are the three financial statements, which is balance sheet, income statement, cash flow statements. And we'll now deep dive further to know more what is balance sheet, income statements, and cash flow in the upcoming PPTs. And I also urge everyone on this call to make notes of it. Don't rely on the recording. Just make notes. And I'll be also taking a Q&A post this whole presentation or deck. So keep writing notes. So the first financial statement is balance sheet. So how most of the commerce student might know that it's a amalgamation of assets and liabilities plus shareholders equity. So I'll be explaining to everyone what balance sheet includes. So assets are nothing but anything and everything that is owned by company, be it in the form of current assets or future economic benefits, etc. So कुछ भी जो बिजनेस ने खरीद रखा है, जो मेरा खुद का है बिजनेस का, वो asset होता है. And then going to liabilities, anything and everything that a business owes to lenders or any other creditors. जो भी उधारी है हमारी बिजनेस की, चाहे वो whatever in the form of bank loans, creditors, etc. For example, I asked this question to a lot of students in my mock PIs. A business bought a car from a bank loan. What entry you will pass? So there will be two entries. One will debit the car account, and second would be credit the bank loan. So in one form, asset will increase, and in the other form, liability will also increase. So it's a equation. How should I put it? Let me just put an equation somewhere to explain this situation better. Assets equals to liability plus equity. Okay, after quite a few years, I'm writing this equation. So what happens is this is an equation. Whenever a business will add assets in their balance sheet, they also will have to increase the liability or the equity by the same amount, or reduce the asset by the same amount by changing the name of the asset. For example, if we bought a car by using cash, cash is also one of the asset. So car will be increased in the asset portion and cash will be reduced. So this is how it works, and this is an equation which falls every time true. Learn this, note down, it was really helpful. So now I've already explained assets and liabilities. Now there is a third component. Oh, we have an equation here also. So third is shareholders equity. So the net asset, anything and everything that a business owes minus liabilities are equals to shareholder. That is the owner's equity, or we can say shareholder funds. So these are the three component which comes under balance sheet. And I have already explained the fundamental equation. which is assets equal to liability plus shareholders equity. Second is income statement. It's a very important income statement, which is very important financial statement, which provides the profit and loss, which reports the financial performance of the organization over a period of time. So what includes anything and everything that is made by a business. For example, sales. हम कितना बेच रहे हैं और उस सेल्स को करने के लिए हम कितना एक्सपेंस कर रहे हैं उसका नेट गेन्स और लॉसेस होता है. So anything and everything which are generating inflow for the business by selling goods and services. If tomorrow I'll sell a car, it won't be a revenue for me, but it's a asset entry. However, if I'm a car manufacturer or a retailer of cars, then it would be a revenue. And at the same time, if whatever the expense I'm making for selling that car as a car dealer, that would be my expense. For example, employee cost or maybe rent of the area where we have parked the car. And the net of it is gains and losses. Third is cash flow statement. It records all the inflow and outflow of cash. For example, in the case of we buying a car from a bank loan, it won't affect any of the cash flow because there is no involvement of cash flow in this whole transaction. So there are three kinds of cash flows, cash flows in financial statement, which is which comes from operating activities or investing or financing activities. So first is operating activities, anything that includes the normal business day to day. Second is investing activities. If we are selling something or buying something, but it is also affecting the cash of the business. Right now, we have, like I have explained that we are buying a car, but it's not affecting the cash flow of the organization. Third is financing activity. कुछ भी debt equity हम ले रहे हैं, anything and everything which includes the firm's capital structure, which means debt or equity, it comes under financing activities. So these are the basics of balance sheet, income statement, and cash flow. I'll take a pause here for 2 minutes and I'll just look at the chart if anyone have any doubt or any questions on the first two slides. Yeah, hi Krishna, I can hear you.
Hello, sir. So can you please repeat equity once?
So shareholder equity includes the amount, how should I put it? Anything and everything that is owned by the owners of the business. For example, मेरे पास 50,000 का एसेट है. मैंने 50,000 मेरे बिजनेस में 50,000 की जमीन है. फॉर एग्जाम्पल इन माई बिजनेस आई हैव 50,000 rupees of land. However, I owe to bank 40,000. That means that an owner have a net equity of 10,000 rupees. That means if tomorrow the business winds up, the owner will only left with 10,000 rupees. I
Okay.
hope I'm able to explain you. If you are unable to get the whole point, you can have a follow-up question on this.
No, sir, I got it. Thank you.
Okay. Any other question? Please don't utilize the chart option. It's very. Can you please repeat the example explaining the explanation you have told? Okay. So this is the classic accounting equation where assets are equal to liability plus shareholders. So in mathematical terms, if you want to increase the assets of the business, it will either increase your liability or equity, shareholder equity, because that equation is universally followed. If you are buying a car using cash, then one asset will reduce, which is cash, and one asset will be increased, which is car. However, if you're buying a car via bank loan, then your liability will get increased. By the same amount, your asset will also get increased. I hope I'm able to explain you, Saransh Bhardwaj. Great. So, does anyone have any doubts, or shall I
Uh,
move to next slide?
yeah, so just one doubt. Can you repeat what you said about selling a car and the cash flow statement?
Okay, so I was explaining Karan that if I'll buy a car via bank loan, there is no involvement of cash because there is a transaction where creditors gave us money directly to the dealer of the car.
Okay.
However, if we take a loan from a bank a month, 1 month ago,
Mhm.
and you use that cash or keep that cash in our own account, then we have to pass an entry in a financial activity that we have taken a debt from a bank.
Okay, okay, got it. Thank you.
Got it. Any other questions or doubts? Feel free to ask. Then otherwise, I'll
Sir, I
get
have a
started.
question. Just wanted to understand in the income statement, if let's say the revenue is from non-operations, from something that's not a major operation for the company, how does that get accounted? Is it a part of the income statement or not?
No, it's not part of the income statement.
Got it.
It will
So
come into the cash flow and it will be
okay,
recorded eventually in shareholders' equity by income from non-operating activities. Because at the end of the day, for example, I bought a car for 50,000 rupees and I'm selling that car for 60,000, then I have to record that transaction somewhere. For example, the entry would be cash 60,000 car, and then there will be another entry which is need to be taken care because the universal accounting equation will always follow the asset equals to liability plus shareholder. If you learn only this equation, you will complete a lot of ground in your interviews.
so you're saying that it will be added to shareholders' equity because the assets are getting reduced by 50,000 because I've sold a car, and that is where it will have to be accounted as plus 60,000 or
No. So, in this case, we are selling an asset for 50,000. However, we are increasing the assets by 60,000, which is 60,000 in cash. Then the 10,000 will fall in equity shareholders, shareholders equity, and it won't include an income statement. There will be a sub part of income statement which is there for capturing these entries. I'll explain specifically in income statement when I'll reach there. Any other questions? Feel free to ask this. These are some basic questions for commerce folks and engineers who are aspiring to become investment banker or consultants. And this is the only opportunity that you can ask me questions. Okay, getting back to the my slides. Okay, so this was the discussion that I was having, Karan, that statement of changes in owner equity that reports the amount and sources of changes in equity investors' income, investors' investment in the firm. So this includes that change in equity.
Okay. Okay.
Further, these are some financial statements or supplements of financial statements, which is not necessary to know. However, having extra information for interviews is always helpful. For example, statement of changes in owner's equity. It reports the amount and sources changes in equity investors' investment in the firm. Second is financial statement notes. We are not able to write anything and everything that is about the operations of the business in the balance sheet. So we put a note there that, for example, you will see if you will see the financial statement, see these ones. Like these are the notes. You will find somewhere in the financial statement there is the explained part of it, why this entry happened. All these things comes into financial notes. Financial statement notes disclose that offer further details about the information summarized in the financial statement. So they allow us to know more about what was it about. For example, here Karan asked this question that what happens to that 10,000? So we might have to put an entry and we'll put one or two or three bases the financial statement and we'll explain in the footer notes. Then there are supplementary schedules and then management discussion and analysis. This is one of the very important, I would say, supplements that you all should know. Every quarterly and after every quarter and every year, there is a management discussion and analysis that happens where the company CEO or chairman comes and gives some comments about the company's financial performance and condition. So this is very helpful to get the synopsis of what is happening in the organization. I can assure most of the individuals who have joined this call might be related somewhere to the stock market, either by investing in mutual funds or equity, or they are from commerce background, or lastly, they wanted to become a consultant or investment banker. I can write on any piece of paper that accounting is a to-do thing for everyone. However, it's neglected by many of us. So feel free to ask a lot of questions in this session. Okay, going forward, these are certain characteristics which a financial statement should have. First is relevance. Like you have seen a lot of things which are included in financial statement which are not making sense. You should adhere to not to put those things because those are not relevant to the stakeholders. Your stakeholders are all the individuals who are consumer of those financial statements, be it bank, governments, IT officers, maybe you, everyone, every investor. So you should only put those information which is relevant to them or making some sense or evaluate the past or future of the company's financial statement. Second is fair representation. It should be unbiased and it should be free of error. So these are the two fundamental characteristics. And further, you have four characteristics to make a financial statement. People often get confused between two of them. These are two fundamental characteristics, and these are four characteristics to make statements relevant or fair. These are subpart of them. Don't get confused with these two. If the interviewer is asking that just state two fundamental characteristics, you just have to say that relevant and fair representation. Don't confuse them with these four entries. So, what are those? These four means comparability. So, for example, if I'm seeing financials of Zomato and Swiggy, though it's not public information, for example, Swiggy is not a public listed company, so it won't be having their financials in the public domain. However, just taking an assumption that we have financials of both the organization. So, first is comparability. How I can able to compare both the financials from the same industry. So it should be the financial statement should enable us to compare both the financials of the organization coming from same industry. Second is variability. Uh, am I able to verify my data? Is there any substance to it? Sometimes we just brag about some achievements in our interviews, but at the end of the day, we will have some verification process. So are we able to verify them? Timeliness. Are we putting those statements on time or not? For example, you might have read about it or not. Baiju is one of the edutech which were unable to publish their financials. This was one of the reasons why Deloitte sort of uh, just resigned as their auditors. So these are the few also the current affairs that you should know about. And the fourth is, are investors or banks or government able to understand what you're trying to say in those financial statements? If not, there is no sense of putting it. So again, are we able to compare it? Yes, then good. If are we able to verify those data? Yes, then good. Third is, are investors getting those data on time? If yes, then it's well and good. Fourth is, are we able to understand it or not? So these are the four characteristics which supplements or which enable the financial statement to be relevant and fair representation. Now, there are some other assumptions, fair representation, going concern. Going concern is one of the important principle. We make all the decision with an assumption that business will stay forever, immortal, going concern. Third is accrual basis accounting. Fourth is consistency between the periods. For example, we mentioned one of the entries for car sale. So every year we will make the same kind of entry. ऐसा नहीं है कि sometimes we'll uh, put it in other way. Sometimes we are putting a different entry. It should be consistent across the periods. Fifth is materiality. Everything should be materialistic in nature. Like there should not any accounting entries which is based on emotion. Uh, these are the few assumptions. Now going to the next slide. Okay, so now we are deep diving further into what is balance sheet. And we'll be also explaining the subparts of balance sheet and what you should know. So a balance sheet is anything and includes anything and everything that a business owes and own at the same time. It provides the financial position of the organization. Second, it bases the historical cost, and it also should show the fair value of the asset. For example, here this is the classic example of a balance sheet, how it looks like. First is assets and subpart is current assets. I'll be explaining current assets, non-current assets in the later slides. So just bear me. Second component is liabilities and equity. You can see this is the equation that we are discussing. These are assets. The left-hand side of the equation, this is the right-hand side. We have current liabilities, non-current liabilities. You can see 5,500 is for assets, 3,400 is for liabilities. That means that we have an equity of 2,100. So assets equals to liability plus equity. Equity here stands for shareholders' equity. Now we are deep diving further into what is current assets and current liabilities and what is working capital. So current assets includes all the assets likely to be used in 1 year or one operating cycle. So operating cycle, what means here is that if I am a dealer of, I'm dealing, my business deals in cars. So the minute I will order the car and the minute I will get the payment from my customer is one operating cycle. So whatever is between the 1 year and one operating cycle, we consider it as a current assets. The operating cycle here is the time it takes to produce or purchase the inventory, sell the product, and collect the cash, as I have already explained with an example of as a car dealer. So these are the some components or some examples, as you can say, for current assets, and cash equivalents, paisa basically. Then second is accounts receivable. What is account receivable is that if I sold a car and I gave them on maybe credit that you will pay me tomorrow. That Tushar knows Karan. Karan came to Tushar and we are childhood friends, and then Karan bought a car and Karan said that bhai main kal de dunga tere ko. I was like, okay, Karan, you can give me tomorrow. So that is an account receivable. I'll post an entry that my car is sold and Karan will give me 50,000 tomorrow. Third is inventories. If I have 100 cars in my warehouse or maybe uh, go down, etc., that is my inventory. Fourth is marketable securities. Every company do invest in some shares or maybe other businesses that comes under marketable securities. And the last is other current assets. These are prepaid expenses that companies own. Like for example, I'm just taking Karan's example a lot. Uh, just apologies to Karan. So, for example, we made a prepaid expense. Karan also have this. Karan is a manufacturer of speakers. So Karan came to me that, hey, I got a new stock of 100 speakers. You want to buy 20 of them and you can put it in your car. So I'll pay advance to Karan that, hey, buddy, I'll just pay you advance for 20 speakers. You just give me whenever I needed them. So वो एक prepaid expense हो गया. For example, if I need them in next 6 months, I'll just call Karan that, hey, man, it's time you have to give those speakers, and this is what the prepaid expense, because I'll be using those speakers to put on in my cars and I'll make a premium to it. Now coming to current liabilities, anything and everything that is owed by the business and a business have to return it within 1 year. First is account payable. If a company bought 100 cars, as I already mentioned, but I don't have the money to pay them for 100 cars, मैंने सिर्फ 95 के दिए और 5 के नहीं दिए. So I'll put an entry that I owe to my suppliers. For example, the entry would be car account to my supplier's name. Second is current portion of long-term debt. Anything and everything that I need to pay from a long-term debt standpoint in the current year. For example, I owe to bank for my home loan for 10 years. But this year I have to pay 100 rupees to the bank. However, my total debt is of 900. So 800 will land in my long-term debt and 100 will be in my current liabilities. Fourth is taxable taxes payable. इस साल का जो भी tax होगा, whatever the tax will be for this year, I will put an entry that these are my current liabilities. Accrued liabilities, expenses that has been recognized in the income statement, however, yet contractually due. So these will become an unearned revenue. For example, I know that XYZ goods will help me make the money, then these are unearned revenue. Last is working capital. The total current assets minus total current liabilities would be working capital. Okay, so moving to next slide. These are non-current assets. Then okay.
Thanks, sir.
Okay. Non-current assets. Assets that will not be used in 1 year or one operating cycle. I've already explained the operating cycle. Now they will provide information about the firm's investing activities. I'm sure you might know we had a piece also in cash flow, which is cash flow from investing activities. So this is the one. So non-current assets includes properties, land, investments, deferred taxes, which are deferred for more than 1 year, and intangible assets which are goodwills. So, for example, I am a car dealer. I bought a land for 1,000 rupees. It will fall under current assets with a land account. For example, I bought a service station. It will come into this. I also invested in current speaker business for 15%. It will come here. And intangible assets, we will be discussing goodwill in length. It's a very tricky, I would say, concept. I'll be taking care in the later half of the session. So tangible assets include all the long-term assets with a physical substance, plant, equipment, natural resources. So anything that you can see is tangible in nature. Marketing folks might know this. Product, goods versus services. Goods are tangible in nature. So everything that is reported on balance sheet at a historical cost less than depreciation. What is depreciation? Depreciation is normal wear and tear. For example, you bought an iPhone, its life of 4 years. And as a business, you have to depreciate the asset by 25% every year if you are following a straight line method. Then land, I have already explained. Now going to intangible assets. Intangible assets, majorly it's goodwill or patents. For example, you might have uh, read this book called Shivdas, I guess. So Shivdas have a patent, for example. So it's an intangible assets. They will have an entry for it. So now going to the next slide. Now discussing non-current liabilities and equity, and also at the same time changes of statement of changes in stock equity. Non-current liabilities, which does not meet the criteria of current liabilities, the easiest definition that you can give in an interview. So all the debts which we own, for example, I bought a home with a use of bank's home loan. I need to pay it, for example, in 20 years. So that 19 years debt would be fall under non-current liabilities or deferred tax liabilities. These are the one. Now coming to the major chunk, which is the net asset part, which is owner's equity. As you can read the definition, residual interest in the net assets after deducting the liabilities from its assets. So assets minus liability equals to owner's equity. It also known as shareholders equity or shareholder funds. So it includes contributed capital in non-controlling interest, retained earning, treasury stock, and accumulated other comprehensive income. So this is something that records the 10,000 rupees that we made from sale of car in the second slide, which is amounted to 10,000 rupees. And statement of changes in equity summarizes all these entries for the period.